Welcome to this session on Paytechs and Adyen. Paytechs are innovative fintechs in the field of payments. How can we explain the Adyen payment process? Adyen is a Dutch payment fintech that went public in 2018 and wants to disrupt the traditionally grown patchwork of payment service providers. Adyen is a payment gateway, risk manager, and acquirer in one, which makes it encompass the entire payment value chain, providing end-to-end solutions that manage the whole payment flow from checkout to final settlement. This includes hundreds of payment methods with direct connectivity to card schemes and fraud protection. The single global payment platform consists of a plug-and-play payments package for merchants, enabling them to rationalize their operations, reduce costs, and optimize results. Now, let us take a more detailed look at the Adyen payment process. If a customer wants to buy a good or a service, he usually requests a payment at the point of sale, short POS, of the merchant. The point of sale is an important component of the payment ecosystem, especially when it comes to offering convenient contactless payment options. A point of sale solution is the combination of hardware and software that enables a customer to purchase goods and services in a brick-and-mortar shop. The merchant forwards the payment request to the payment gateway, which is provided by Adyen. A gateway is typically a web server that is connected to the merchant's website or POS system, but it is not directly involved in the money flow. A gateway helps merchants initiate e-commerce, in-app, and point-of-sale payments. The gateway is open for a variety of payment methods by connecting multiple acquiring banks and payment methods under one system. The payment process initiated by the gateway is then passed on to the risk management, where a range of services and techniques analyze the transaction and then assess it for its risk score. Filtering high-risk transactions enables merchants to minimize the number of fraudulent payments and thus improve revenues. Performing precise risk management is highly complex and requires big data analysis. Adyen introduced its own risk management system, Revenue Protect, which enables merchants to identify and block fraudsters while reducing friction for legitimate customers. In the next step, the payment information is forwarded to the payment processor. In payment processing, the payment processor communicates the transaction and connects the merchant's bank with the customer's bank to complete the payment transaction on behalf of the merchant. On the customer side, the payment processor, which is also provided by Adyen, first sends a payment request to the customer's bank, also called the card issuing bank, and thus to the respective card network. Card networks such as Visa, MasterCard, and American Express define the technical infrastructure and the rules for payment processing, as well as the charge fees for this service, so-called interchange fees. The interchange fee is a premium paid by the merchant via the acquiring bank to the card issuing bank of the customer for each card-based transaction. The amount of the fee varies depending on the card type, the transaction value, and the merchant type. If the customer's request to buy something is verified by the card issuer or the customer's credit card company, the payment is authorized. In this case, the card issuer reserves the authorized amount on the cardholder's account in order to first prepare and then execute the actual payment. In the case of e-commerce, in-app and point-of-sale payments, the authorization is deployed as an API call to the payment gateway. The gateway and payment processor then carry out the necessary validation and risk checks and ask the appropriate card network to authorize this payment from the customer's bank to the acquirer. The authorized payment is then sent to the acquirer, which is a bank or financial institution that acquires funds from a customer on behalf of its merchant. To be able to accept card payments, an acquirer should be licensed by card networks and either cooperate with a payment service provider or should be a payment service provider itself. This is the case with Adyen for customers from, for example, the US, Brazil, Hong Kong, Australia, and Europe. After the acquirer, in our case Adyen, has received the customer's payment, it sends a payment confirmation to the payment gateway, which then sends the payment confirmation to the merchant's point of sale. Consequently, at the point of sale, the payment confirmation is also visible to the merchant as well as to the customer. Finally, the acquirer, in our case Adyen, transfers the corresponding amount to the merchant's Adyen account. In this account, the merchant gets access to Adyen's payment services, which can be managed and customized via the interface of the customer area of the Adyen API. Adyen accounts have two levels: company and merchant level account. A company level account defines settings for the company, while merchant level sub-accounts can be used to define the specific settings for each merchant. For more insights on PayTex, have a look in the book FinTech Business Models. Thank you.